Hello. So there's an assumption that if a trading setup worked well in the past, that it will continue to work well in the future. However, when trading performance starts to deteriorate, then traders start to blame their execution or discipline or even their psychology. Now, sometimes these do matter. However, there's actually another explanation, and it relates to a potential change in the market environment. This means that the same trading setup may have different expectancy profiles across different market regimes, and therefore it's important to evaluate the true stability of a trading system over time. Now, we're going to have a quick look at a simple example. Now, imagine analysing the same trading setup across two different time periods. As you can see down here, firstly, we've got period A between January 2022 and June 2024. It has 124 trades over that period, a 48% success rate, and expectancy of 1.84 risk to reward. Now, in contrast, you've got period B between July 24 and January 26. This had 119 trades, 47% success rate, and an expectancy of 1.09 risk to reward. Now, as you can see, the success rates are almost identical at 48 and 47% respectively. However, as you can see, the expectancy fell dramatically, moving from period A across to period B. And now the value generated by each trade during period B has dramatically changed. So let's have a look at why this might have happened. Now, this is a situation that many traders encounter. Their trading system has worked well for months, even years. Their backtests support it, and the live results are good too. But then trading performance starts to deteriorate. This means that profit targets are harder to reach and returns start to become inconsistent too. This then contributes to a drop in confidence and traders questioning their own trading system. However, they tend to be looking in the wrong place for their answers. The mistake is assuming that a trade setup exists independently of a market environment. But the reality is that a trading setup operates inside a regime, and a regime isn't just simply a period of time. It tends to be an environment where similar forces dominate market behaviour, meaning there's different market regimes that produce different characteristics. This changes, the persistence of trends, the influence on volatility and directional behaviour, and the distribution of outcomes as well start to change. And it's the change in those distributions which is the reason why expectancy also changes, which is what we discussed in the example earlier. A trade may be identical to what's gone before, but it's now being supported by a different environment, ultimately. So this starts to create problems because performance and confidence have deteriorated. Now traders are looking to modify the rules of their system, so changing profit targets, adjusting risk, and trying to optimize trade entries. I mean, some traders will actually abandon their trading systems altogether. But if the real issue is regime sensitivity, then they're not focusing on the underlying issue. And if the diagnosis is wrong, then the approach to finding the solution will also be wrong as well. Now, this is one of the reasons why I started to think more structurally about my own trading. I used to ask questions like, will this setup work? And then I evolved towards how stable is expectancy and how sensitive is the current performance to a change in the market environment as well. And it was those types of questions that were more valuable than looking at the headline performance statistics like success rate. And this formed the goal of this channel, to start understanding the structure underneath trading performance, because most problems that traders interpret as psychological are often more structural. And one of those structural questions is whether the environment that created that trade setup still actually exists now. Therefore, if you'd like to learn more about trading expectancy, structural instability, drawdown behavior, or even risk architecture, then I'll provide additional information in the description below. Thanks for watching today, and I'll see you in the next video.